The ability for transparency, tradability, and then a new way to put value into art and to distribute it to our cultural institution is at the heart of what we do, and we're not the only one. So I think this asset class gonna move slowly to become publicly owned because that's what we're facilitating. It's transferred to the public. And the public wealth is huge once you unlock it.
Welcome to Smarter Markets, a weekly podcast featuring the icons and entrepreneurs of technology, commodities, and finance, ranting on the inadequacies of our systems and riffing on ideas for how to solve them. Together, we examine the questions: are we facing a crisis of information or a crisis of trust? And will building smarter markets be the antidote? This episode is brought to you in part by ARTEX Exchange, bringing better price discovery and risk management tools to navigate today's commodities markets through centrally cleared, physically deliverable futures contracts in energy, environmental, battery materials, and precious metals markets. Smarter markets are here.
Welcome back to Summer Playlist 2025 on Smarter Markets. I'm Dave Greeley, Chief Economist at ABEX Technologies. Our guest today is Yassir Benjelloun-Touimi, co-founder and CEO of ARTEX Global Markets. We'll be discussing how ARTEX is building the market infrastructure to broaden access to trading and investing in museum-quality fine art, as well as the challenges and opportunities in creating a new asset class. Hello, Yassir. Welcome to Smarter Markets.
Hi, thank you for having me here.
I've really been looking forward to having you here and to this episode because we get to combine topics that we don't often combine. There's a topic that we haven't talked about on the podcast, which is fine art, and a topic that we love to talk about, which is building new markets. And you founded ARTEX Global Markets, which operates a regulated market for fine art. And I wanted to start off, if you could just let us know, why did you build a market for fine art?
It's been established for such a long time that fine art and art generally has been not only something that has been used to collect and the pleasure and the emotion that it generates, but we were interested in seeing how it did make a few people actually very rich. How is it an asset that can hold value over time and a lot of the time outperform the market? And when we looked at the details, because there is the generic things that reflect the performance of art generally as an investment, it's roughly around 9.5 to 10% a year. But when we looked at the details, what was very interesting is to see that actually a very clear statistic will give you an idea. If you look at the average return of artworks that are less than 10 million over a period of the last 15 years, for example, it's around 16%, which is really meager return. It's not great. And you compare it to artwork that are 10 million plus, and you have a staggering return of 380%. And that is something that is really discriminatory especially in the formation of capital within the art market. You see, it's one of the areas where the capital will go and really concentrate on very few artists and very few artworks. So as an economy, we create value by working. So artists works, they sell their artworks, they are commissioned, and then they will go through such a Darwinian process by which they will go from being worth $1,000 to $5,000 to $10,000 to $20,000. But for them to reach that level, to go beyond 10 million, 20 million, there are 0.001%, probably 1 out of 3 million artists that becomes that. And this is what constitutes that gem, that gold element, where it becomes an investment by its uniqueness, its rarity, its great provenance, its timelessness. And we thought for the time being, this has been really for just family offices, ultra high net worth, and even those, very few people are invested. So 2/3 of fine art is in the hands of family offices and ultra high net worth. And only probably 3% of them really are invested and holding all that 2.6 or 7 trillion of assets. So that discrimination somehow we thought we tried to, over the last 50 years, we have tried to fund structures and private equity format to give people the opportunity as well to get a part of the cake. But so far, nobody has really opened a path to everyone or a lot of people to be able to go there. And we just came in and thought market infrastructure is probably the best possible answer. The best possible answer. Why? Because it offers three things that are amazing. Number one is protection. You create a market infrastructure that enables the financial system to distribute your product. That's unique. I mean, it's the only way for financial banks that are regulated to be able to touch your product. So that's enabling an accessibility. And as an investor, this is as extra protection. You get the high regulated level of an exchange plus the high regulated level of a bank, which means that before the product comes to you, it's been really tested and checked and everything is done. The second point is with opening the access to financial institutions around the planet, you get access to everyone you want. Everyone that has a bank account can trade our product. And the last one, which was missing as well, is a combination of two things. Having that freedom, the freedom to choose the artist you want, the artwork you want. You can buy it, can be long, you can be short, you can express your opinion. And that's a very new thing because there is only experts who tell us who are good and what they like, etc. But suddenly we have this free opinion to decide where we think the value of art should be. And that's a change in the system on itself. So that freedom to buy when you want, to sell in when you want, and to participate, you don't have somebody who's running that position for you. It creates a natural engagement between the buyer owner and the artwork when you do that, and the artist structurally. It's a huge engagement from the moment you don't own to the moment you own just a piece is something that exists already in your mind.
And I want to dig into this path you chose and the type of market you built to give that type of access. Could you take us a little deeper into what type of structure for the market did you choose and how would, the proverbial person on the street access it to buy and sell art?
It's a very good question because we thought hard about this thing. As a market infrastructure, that is a kind of an exchange, a multi trading facility, you are open for business only with regulated institutions, which means banks, brokers, financial intermediaries that are regulated. So structurally, we are a B2B2C business. If somebody is interested to buy in share, and part of the democratization is that we made it a unit around 90 euros, which is equivalent to $100 equivalent for each unit to make it very much accessible. But you still have to we create, to go into the detail, we create one company that own one masterpiece. That masterpiece and that company will issue through primary markets, list the shares distributed through the banking system. So if you want to participate, you need to ask your bank to allow you to buy those shares. And when that is done, secondary market trading starts. So in reality, as a participant, you are buying shares that have an ISIN as you are buying any other shares in any other market. So you need to be familiar with the fact that you're going to be owning a share. Instead of having whatever Microsoft share or Apple share, you will have something called Bacon or Picasso 1932, and that's what you're going to be seeing in your portfolio. So as an investor, as somebody who is interested, you go through your broker, you go through your bank, or you open an account to some of the persons that are collected already to our exchange. As a new exchange, it takes a bit of time to be widespreadly connected. And we are starting with Europe for the time being.
And you mentioned that you're focused on art that's at the tail end, the upper end of the spectrum, saying you're saying 10 million and above. For people who aren't familiar with that world, what type of art is at that end of the spectrum? And maybe what are some of the pieces that you've issued shares in so far?
We are focused on, for the time being, on $40 million plus artworks. And what kind of, have like 30 roughly artists that we look at that are timeless artists. Unfortunately, 29 of them are dead, only one that is still alive. So the kind of artists we will be looking at are in several periods. So in art, you have old masters, which are Renaissance type, Da Vinci, etc. You have the Impressionists, and in there you have Monet, Manet, Pissarro, etc. You have modern, Picasso, Matisse, among others, and you have contemporary, Bacon, Warhol, Basquiat, and that's the kind of the most established one. If you sum up between the old one, we're talking Da Vinci, we are talking all basically the Renaissance painters, or we going through the great painters from the Impressionists or through the modern side. We have looked at really the artists that have established their value, and their contribution to the art history is now undeniable, whether we like it or not. And if we project ourselves in 100-year time, would we be talking still about Van Gogh or Picasso in 100 years? And our answer is yes. They are so relevant in the twist and change of art as a representation of our life, as a witness of our life, as a way to express our humanity. And these things, we will not rewrite history. We wrote that history already. It is established. And the fact that that history is established, it depends how we teach it in each country. But the big terms are there. And I think art is more Pacific, a Pacific side. So we kind of, there is less discussion about whether it is established or not. Everyone knows Picasso, everyone knows Da Vinci. And that fact means that its capacity to hold value, because it's in limited supply. We can't bring back Da Vinci to bring out to paint a new artwork. There are only 15. They are on museums, probably one that is left around, and hopefully one day will bring it over. But that's it. That rarity, that's what's keeping uniqueness and role in history, plus its rarity, its quality, is what can make the value of what it is. People wonder why we paid $450 million for a piece of art where it's probably 20% of it is Da Vinci. Even if it's 20%, is just something that is completely unique. The value can change sometimes on things that we are not sure of, that are still to be tested. But on people who invested on the top end artists are still keep making money for the last 50, 60, 100 years.
You and your co founder, Prince Wenceslaus of Liechtenstein, both come from careers in finance and banking. How did you come together on this project, and what tools were you bringing from the world of banking and finance to the art world?
We've been partners in London in a hedge fund slash asset manager. And we met more than 10 years ago. And my background and his background, yes, I worked for largest banks in the world. I worked, have my own hedge fund, etc. So my background and the background of Wenceslas is finance. So the idea was back in 2018, the interest rates were so low, asset was so priced everywhere at the highest imaginable level, that because we are both of us amateurs, art amateurs, but with a different path. The princely family of Liechtenstein have been collecting for 600 years. They own probably the second largest collection of old masters. I come from a completely different background where I discovered art when I started studying in Paris, when I came to France, and then crossed my becoming a European citizen, basically. So this different, but we both share our deep love for art. We like art, we love art, we value it. And at that moment, we were really asking question about, if we had to invest now in any asset, the only thing that seemed a good value for us was art. And we just ask ourselves, it's a shame that we can't trade it and put it in a fund. And this is where the conversation started, really. Is we can diversify the return on the long run. If you invest over a period of 5 to 10 years, you're pretty sure to make money out of it. And this is how the conversation, and we started saying why we don't do it, we don't make it. And then the more the discussion developed, the more the idea emerged of an exchange and then find the right regulatory framework in Europe. And because Europe is mostly the best invention of Europe right now, or the most innovative thing that push is regulation in order to make 27 countries work together. And that regulation, probably banks have suffered from it. But there have been innovation in order to reduce the hegemony of large exchanges and make the emergence of a new one based on giving more lack of discrimination and transparency to people, created an opportunity for us. And we found that route and we said, wow, let's drop everything and just focus on that. We sold the business, we took half of our team, and we started ARTEX. And we had no idea how this would be. My God, it's so complicated. It's so difficult to get a license. It has been a real challenge to get banks adoption. Banks are really heavy institutions, highly regulated. Their tolerance of risk right now is so low for the aftermath of 2008 and the great financial crisis. So we have faced a lot of challenges from the outward that look at us like vulgar people trying to commoditize art. So, and what we tried to do, and this is a dimension that is important for us, is we have a very strong philanthropic dimension supporting art. How? Because we lend every single artwork to a museum. We want people to share it, to see it, even if they don't own a share into it. And we want cultural institutions to continue to conserve our cultural heritage. And they don't have the money to do so. So they need some sort of form of support. And this, we found it as a one way to bring a lot of artworks out of free ports and out of boats and out of great villas hidden into the public space and into the eyes of everyone.
And you had mentioned earlier that ultimately the art or the shares in the art trades on a secondary market and the same way that a Microsoft or other equities.
Not the same liquidity, let's be honest. So I don't want to overpromise on that.
How is the ownership structured? Is it that straightforward that you're able to create an equity out of a work of art?
Yeah, you have a Luxembourg Société Anonyme, which is a limited liability company in Luxembourg. And the reason we chose Luxembourg is probably because it's the best securitization law in the planet, the most used, the most accepted, and the one that have very straightforward rules despite the new European rules that are rising. So it's the quality and the stability of the company that will own one. And we try to keep it stupid, simple and stupid. One company, one artwork. That's it. Issuing shares for 100 million artwork. We will issue 1 million shares, for example, at €100. And then it start trading in secondary. It has a board of directors. It has a governance, and then it has a general meeting that is at the top of level. So it is organized really like a company. However, one of the limitation is nobody can own more than 10% without making a takeover bid.
And the takeover bid would then be kind of the way to take the art back private?
Yes, and it's subject to the payment of, it depends which issuance, but in average is 20% premium over the last 10 days of trading. And then it starts an auction unless somebody else come in and they have to pay another 5% on top. So that's maximization. We're trying to maximize the shareholder return through that process of auction. So we're combining two things really, and this is how you need to see this artwork. We take in the best of the artworks, and then there are two ways of the price development. One, the price keep tracking to realize that 10% expected return on equity on average. And if it doesn't, over time, it will become mispriced compared to the art market. and somebody can just come and take it over. So you have always an exit toward the upside. The quality of the underlying artworks and masterpiece just guarantee that downside risk is limited and you don't have bankruptcy risk basically because you're not an operating company.
And are there cash flows outside of that exit event where someone comes in and buys the work of art? So I'm thinking you're giving the art to be displayed in a museum. I don't know if there's a rental associated with that or if that's done for free. And then I imagine you have insurance and things like that on the art. How do you think about the cash flows prior to ultimate purchase?
We had that choice, but I think we needed this investment. And remember, let's get back some of the fundamentals. The art world and the finance world do not like each other, do not commingle with each other. They are two separate worlds. One thinks of the other as vulgar and mostly money driven, and the other one is thinking lack of organization, of regulation. That's the far west. And in order for us to, and unfortunately, we sit between these two worlds, and we have to find and to walk the fine line between these two worlds, not to drip in any excess of any side of these worlds, because we can be actually, we're here to assemble and make this work together for the better good of all. So we have chosen not to run the artwork, but to give it and to lend it to the museum because the museum do not have money and do not have the ability to acquire artworks. And in any way, by having the artwork in a museum, it implicitly enhances its value, whether we like it or not. And the way we think about it is when we set up the limited liability company, we part of the fee structure that are charged is there a setup cost fee to cover the setup cost plus 2 years of working capital. So, what is in average the working capital? The average, I would say, average is 0.13%. It's 13 basis points. That's what it costs to on a yearly basis. So for the first 2 years, it is covered by the SPV itself or the Société Anonyme. And then after that, it will be paid by ARTEX because ARTEX makes money every day from an artwork. And it's the difference between us and Sotheby's and Christie's is they sell, there is a transaction, they take the money, and then the artwork leaves and lives its life. For us, it trades every day. It's part of an index. We sell data. So basically, we make money. So one way to keep the exclusivity of the artwork trading just into ARTEX is to pay and make it a zero coupon for people so they don't have to get diluted on a yearly basis.
That's a really interesting approach. Obviously, as you said, it's still early days on some of your first artworks. I was curious, what banks or brokers are connected with you now? Not that like we need a list, but I'm just curious for listeners who may be interested in checking out your market. How would they do that?
There is a series of banks on our website, which are like 27, 28 banks that are connected of us. The biggest of them are probably Crédit Agricole, UBS, among others banks that are connected to us. And we are partners with the Swiss Stock Exchange, and we have built a bridge toward their system to allow all their members to get access to our market. It's called the STI. And this structurally allow us to inherit another 50 members, but within the Swiss banking system. So today, where are the countries where you can have access is mostly European. It's quite focused on Switzerland and Liechtenstein, where you can have access to mostly any bank. I think France as well has developed, and Italy, because we have partners in Italy as well. And I think the rest of the countries we're not expanded yet in the UK, for example, or in Spain, or in Germany, where our reach continue to be quite low. But this is a growing story. It takes a bit of time to have enough members, and people, instead of becoming member, they go to another bank that will allow you. So you have the members, and then you have the banks that use one of the members to execute their transactions.
part of the aim you were talking about was broadening access to ownership to this type of art from the fraction of a percent that's involved now to a broader audience. I'm curious, as you think about who's coming in to invest in these products and trade these markets, what do you think the next group to come in or that has come in will be?
The first part of the market that we focused on and that was listening to this is really ultra high net worth family offices, basically private bank clients. This is something that makes sense for them. Why? Because they are usually and naturally the main holder of art and investor into art. And the fact that they can't buy 40 million plus and they have like a regulated exchange and liquidity, it gives them the opportunity to invest into art in the segment they want without holding the whole thing and bringing out 40 million, which is for most is too much. Because when you look at the statistics, the average investment for family offices is like 3% in art. As soon as you go beyond 500 million of owner of investable assets, it becomes 13.4%. The more you go up, the more the portion invested into art become important because they can afford to buy great pieces. They know that this is what's going to make the value tomorrow.
You may have mentioned this earlier because you've mentioned a number of the challenges that you've had to overcome along the way. But I'm curious, looking back, what's been the biggest challenge in getting interest in this new financial product and building this new market?
Being in Europe, I'm European citizen and come from Morocco. I love Europe, but unfortunately, we have lost sense of risk taking and innovation, and we regulated so much our financial institution that they are paralyzed now to do anything new. And last time I was looking at the comment from a JP Morgan CEO who was pointing toward we lost, I think, 15% or 20% of global GDP in the world. Why? Because we have made it extremely difficult to invest, extremely difficult to raise capital, extremely difficult to innovate. And, we're looking for security jobs. And this is not a political statement. It just, while Europe has an amazing history of before the Second War of bringing so much things and innovation, I think we have not had today the conditions for, especially when you are dealing with financial institutions post 2008, it's extremely challenging. And if you have to go through the whole regulatory framework that doesn't allow you to communicate around your product, etc., compared to the US and North America, for example, generally, it's a massive difference between the two. So that's one of the challenges that we found. And people, as a set of mind, we average consumer is risk averse. I mean, and this is why when you do asset allocation globally at the time, people say you wanna invest in equity, buy S&P. You wanna buy bonds, buy Bund. I mean, this is the mentality. I think we don't encourage people to invest in equity to start with, but every framework of piece of legislation in any country, Europe, is geared toward funding their deficit. So we encourage money to go and fund deficits rather than create companies. In the US, is geared toward the reverse, and in North America. And unfortunately, that has a price. So very proud European, love Europe. But when it comes to, as an entrepreneur, your ability to raise capital, to sell your product, to promote innovation, and to face regulatory hurdles and complexities of basically administration, it's heavy.
To try to surmount those hurdles, you must see a large opportunity. How big do you see the opportunity in what you're doing? And do you ultimately see fine art as potentially becoming a new asset class?
We are not on our own doing this. I spend a lot of time talking to other CEOs and founders of enterprises and companies that are really thinking about how art can be finally disrupted. This is a space that has not been disrupted really for at least 300 years. The last main innovation in art was Sotheby's, probably coming in the 1740, whatever it is. So you think about it, this is a like a kept for a small elite that keeping the leash under a leash for this. And I think we're benefiting from an interesting transition from the mentality of old collectors. Most of the big, large collectors are well advanced in life. They are probably on average in their mid 70s. And collecting was part of social differentiation as well. Not most of them, but some of them are. That was the driver. I am rich. I sold my company. I need to have a Picasso at home when people cannot have dinner. That means I am smart. I understand art. I am cultured. But we are switching in a new generation where their children are not interested to keep this collection for themselves. Their children are more interested into sharing it. And for them, this is the history of their parents, not their own. They have other things that they want to do. So there is an amazing transfer of art collections that's going to change hands in the next 15 years. And the way it's going to change hands, we think we are one of the solutions to it. Remember, this is a 3.5 trillion assets that trades 65 billion a year, 2%. It's non-existent. So people call it art market. It's not a market. It's a little souk somewhere. That's it. It's not a market. Equity trade 200%, gold 150%. The ability for transparency, tradability, and then a new way to put value into art and to distribute it to our cultural institution is at the heart of what we do, and we're not the only one. So I think this asset class gonna move slowly to become publicly owned because that's what we're facilitating. It's transferred to the public. And the public wealth is huge once you unlock it.
And coming back to unlocking it and to ARTEX, I'm curious, what's in your pipeline, for lack of a better word? What pieces of art are you potentially focused on next?
We have ongoing, so we did the Bacon, we're doing the Warhol. We have a Kandinsky that is coming in September. We have a Basquiat, we have a Malevich, we're working on a Van Gogh, a Monet. I mean, this is a list of amazing names that are really something where we want to tell the story, make people understand the essence of things. This is part also of what we do, bringing an artist and telling the story about an artist, but we don't have to give his whole life. When you speak to specialists, they are worried about whether they give you enough information. They are scared that they didn't give you. We think you're completely the different. We think we need just a germ in your head and that thing will grow on its own. But we have to put an essence of things, and that thing you will, when you start being involved and engaged and you buy and you go and you're going to take your children to the museum and tell them that you lending this to this museum so you will follow whatever happening on your artist. We're creating a club of fans. It's a community that create by itself for people who are interested into the artistic scene. But what do you do when you interested into, when you learn about the whole evolution of that movement of art, it gives you the alphabet to start understanding also what's happening in the art scene now, which is not something you understand, but you need those foundation, a little bit of understanding. The alphabet is what we provided. Great artworks from great artists, but it is the alphabet.
And not to get too far ahead of you here, but I was curious, do you see this model that you're using extending beyond fine art at some point?
We think the natural extension for us, anything with art, so music catalogs, film catalogs, film financing, but we can extend beyond that. I think anything that has a combination of beneficial money and emotion, and that emotion can be passion. I think sport is an art. You watch football with the NBA, etc. You see great artists basically, and that we develop a passion for those people. So I would say anything where there is passion and where people want to get involved, what they're passionate about, we can facilitate the access and that connection.
Well, thank you very much, Yassir. I really appreciate you introducing us to the work you're doing at ARTEX and this kind of fascinating new application of a market infrastructure build out into the art market and to the things that we're most passionate about. This is our summer playlist series, and each year we like to think of it as a little beach reading, a little beach listening for people to do when they get away for a holiday. And as part of that, we'd like to ask each of our guests what may be on their own beach reading list for this summer. I imagine you won't get a whole lot of time off given how busy you are. But if you get a day or two, what are you planning on reading this summer, Yassir?
I just started something that I am very much interested in is called Transurfing, which is a quite big, a friend of mine recommended and I started it and I find it very fascinating in to understand the world of metaphysics, which is something that I'm more a mathematician. So it's an extension for my interest for science as well. The other readings is something that I love is a writer that I really cherish. And I whenever I come back, I reread, and I think in the light of what's happening is interesting. It's got Amin Malouf is the writer. It's quite known is a Lebanese writer, and he wrote two books which are phenomenal. One is called Samarkand, like the city in I think is Uzbekistan, and the other one is very very interesting book on the Crusades viewed by the Arabs. It's a very interesting reading on how the Crusades, which is a war, has allowed two civilizations to meet and the consequences that it have, actually the beneficial one that have been that even fighting has allowed us to share into between two parts of the world. So, and I love rereading those whenever I can. I think I'm going to give them another crack this year.
Thanks again to Yassir Benjelloun-Touimi, co-founder and CEO of ARTEX Global Markets. We hope you enjoyed the episode. We'll be back next week with another episode of Summer Playlist 2025. We hope you'll join us.
This episode is brought to you in part by ABAX Exchange, bringing better price discovery and risk management tools to navigate today's commodities markets through centrally cleared, physically deliverable futures contracts in energy, environmental, battery materials, and precious metals markets. Smarter Markets are here. Contact sales at abax.exchange to get started. That concludes this week's episode of Smarter Markets by ABAX. For episode transcripts and additional episode information, including research, editorial, and video content, please visit smartermarkets.media. Please help more people discover the podcast by leaving a review on Apple Podcast, Spotify, YouTube, or your favorite podcast platform. Smarter Markets is presented for informational and entertainment purposes only. The information presented on Smarter Markets should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on Smarter Markets are those of the participants and do not necessarily reflect those of the show's hosts or producer. Smarter Markets, its hosts, guests, employees, and producer, ABAX Technologies, shall not be held liable for losses resulting from investment decisions based on informational viewpoints presented on Smarter Markets. Thank you for listening, and please join us again next week.